welcome to another S&P 500 weekly analysis. Running a little late this week. And before I begin, let's go and take a look at the weekly review that I posted on my newsletter, the Pulse of the Market at substack.com. And if you're interested in reading this poll in its entirety, go click on the link in the description below. So basically, what I have said here, just going back to what I posted last week in the Pulse of the Market market review, basically saying that the froth in the market, and I'm saying the longer this overbought or whatever you want to call it remain, the more severe reaction will result when the market decide to pull back. And on Wednesday, I posted this in the trade plan to alert all the paid subscriber of the newsletter to be aware that we're still dealing with the negative divergence between the S&P 500 and the cumulative AD line. And the longer this divergence remains, we should be cautious about overcommitted on the long side in the market. And finally, I also posted this in the newsletter to just kind of remind everybody that the market has a tendency to catch everyone by surprise, and to saying that the current VIX level, that was basically below 16 and somewhere in between the 14, 15, 16 area, and the put-call ratio is now at the 0.6, that these are the prime condition for the market to do a rug pull and catch everyone in a surprise. And here we see from this market profile chart on Friday, we have that rug pull. Basically not a big surprise to us, but the magnitude of it was a little bit of a surprise because I did not expect a greater than 3% move. This is basically a 3-point-some-odd% move or swing for that particular day. And it essentially took out the gain made from the last 20 sessions. So that is a rug pull. That is something that, it doesn't happen often, but when it does, a lot of people basically have their account blowed up. And take a look at this chart here on the weekly for the S&P 500. I'm basically saying that there were 3 instances, including last Friday, that the S&P 500 on a weekly basis have lost greater than 3%. And the most recent one was in July. And then a year ago, back in 2024, in July, we also saw a greater than 3% loss on in a single week. And in that particular instance, it has pulled back like a little bit over 8% before it resumed its uptrend. But in the the last July, we saw it reverse in the following week and continue in the uptrend. So this is the key week to see how it behave, and that might give us a clue. Is it going to be a repeat of this price action or a repeat of this price action from 2024? So if we get a little bit of a positive week, then we could be looking at the possibility. It doesn't guarantee that's going to happen. Anything is possible, right? It could be totally, completely different. But at least if we see a positive week coming out of this week, then we could be looking forward to something like this, or the possibility of something like this, from last July. But if we see a negative week, then we could possibly seeing this from a year ago, the July of last year. And here looking at the Dow Jones Industrial, we also see the Dow Jones Industrial, we saw a 5 consecutive down session. So it was back in last July. I mean, so in July we saw that, but then it came back and, kind of consolidating and slowly moving back up. So we'll see, will that happen again, and see how the price action behave in this coming week for the Dow Jones Industrial. So here's the NASDAQ 100. See the NASDAQ 100 at greater than 4% on this daily range on Friday. And the last time it did that is back in December last year. And you can see after that, it kind of consolidated for a while before it try to make another high and then breaks down. So we'll see how this price action going to behave for the Nasdaq 100 in the coming week. And depending on which trend line that you're following, basically you could still say the uptrend, still pretty much intact because it hasn't broke down from either one of these supporting trend line or really breaking down to form a lower high, lower low. Because if we take this, major low here, this low here is still above this low. So until we see it break below 23,000 on the Nasdaq, and we're pretty much, still looking for uptrend. Okay, that was just a quick glimpse of some of the material that I have posted in the weekly market review in my newsletter. So there are a lot more content, a lot more stuff being covered in that post. So I would highly recommend that you go and click on that link in the description below and go and check out that post for a broader perspective of what the market and the market internal as a whole is doing. Now let's go and take a look at the cash index, the S&P 500. Remember last week we were talking about taking out the all-time high, and if we could take out the all-time high, then we could see it try to work up to the upper range of the weekly expected move. Now it did take out the all-time high here, and but unable to continue to push higher. And then on Thursday, on Thursday we did put in a new all-time high before that Friday liquidation break. And I was not expecting the market to come back in to the lower range and it even more so than, break to the lower range because I was looking for the OpX to be somewhere around here in the middle of the range, maybe somewhere around 6,700 to get pin for the weekly option expiration, but as you can see that it just pulled down and sold off and came down to this 65.50. We have a little bit of a supporting level here on the 65.52. Now a lot of people are saying that hey, maybe Trump the market sold off because Trump's tweet about increasing the tariff on China 100% on everything. Well, yeah, that could be. I think that's a driver or the catalyst that triggered the sell-off. But remember what I said, based on the market internal and the price action, the market is already at a state that is getting ready for a liquidation break, and it just need a nudge from something. And it just happened that the tweet from Trump have created that trigger and create this massive sell-off on Friday. Now let's go and see what the market is pricing in for the coming week. And here for the coming week, the market is pricing in the upper range somewhere between 6715.80 and 6690. Then on the lower range, you see there's a much wider range here, and it is between 6389.30 and 6250. So what we're going to be watching for in the coming week is to see, would it come back up and reclaim this 6,700 area, basically coming back in here in the upper range. Okay, see, could we get back inside of this basically a little bit of a balance area here, or would it, continue to fall and come down into this 6,400 area and see would it be able to find some acceptance or support here. Now, as I'm making this video here, we're seeing the Globex or the Asian market is already showing a little bit of a positive movement on this, on the price action, and it is currently up. The future is up as somewhere around over 70 point. So we could see a little bit of an update, but again, from the earlier mentioned, that it depends how the week ends up. That's the key here. We want to see how the week ends up. Is it a positive week or a negative week? Then it might give us a little bit more clue on what to expect for the coming weeks. And here looking at the SPY, the market is pricing in on the upper range. It's pretty tight. It's essentially somewhere around 667.50 area here. But for the lower range is between 639.10 and 631. Now notice that we see a low volume area here, right? This right here. So basically be watching to see will the price get above this area here. Oops, this area here. If it could get above this, then we basically are looking for the price to work itself back up into this upper range somewhere around the 60s. 667. If it is unable to get up, above this this low volume area, then we're going to be watching the price possibly come down into this 639 or the 640 areas. So that's pretty much a 6,400 for the SP 500 cash index. So those are the key level to watch is up here, the 667 and 640. And the key thing is, will it break above or below this low volume zone? And here we are looking at the QQQ, and the market is pricing in the upper range at between 607 and 606.10. For the low range is between 572.90 and 566. Similarly to the SPY here, we're basically looking at this low volume area here. So we'll see will the price move through this low volume area and break below it and into the lower range of the expected move, coming down to this 572, 573 area, or would it, basically stay above this low volume zone and move back up toward this high volume node and possibly move toward the upper range of the expected move for the week. Finally, I just want to leave you with this note here from the market. You see this ES, the E-mini S&P 500. We do have a Globex all-time high that has not been tagged during the regular trading hour yet. So that tells us we could expect another high from the S&P 500. Now, right now, a lot of people might say that it got to be crazy. We just have a hell of a sell-off, and I think we're in a correction. Well, maybe not. So remember, we're basically still looking at the price action from this week to see what it's going to do and what is the market telling us that it might be doing. But in regardless, if it's still going to continue to move down and correct a little bit more, basically what this is telling us is after this pullback, is over, then look for the price to possibly come back up and put in a new all-time high. And that's basically what it is telling us. It is not telling us that this week we're going to make a new all-time high. It's just telling us that, hey, this market has not topped yet. So don't be go and calling, like a chicken little saying the sky is falling, the sky is falling. It's not. So we're just taking out some of the excess. And yeah, a lot of people that is over leveraged, they got blown up. So I'm just going to leave you with this and just, keep in mind about this Globex all-time high, what it means. And if you want to see additional content from me, be sure to go check out my newsletter, the Pulse of the Market, and subscribe. There's a free version and there's a very inexpensive version, $15 a month, that is less than 2 ES tick, and you could subscribe that and get my daily trade plan and all the exclusive content for paid subscriber. So thank you for watching and good luck on your trading. Thank you for watching. If you like the content, be sure to give it a thumbs up. And if you are new to this channel, click the subscribe icon to subscribe and help support this channel. Now, for more content from me, go visit my newsletter at smtraderCA.substack.com. You will find trade ideas, daily trade plans, weekly market review and analysis, trading tutorial and strategies, and much more in my newsletter, The Pulse of the Market. And the link is smtraderCA.substack.com.